Spreadsheet Guide version 4, video 3, dashboard. We see how I've populated it. That's the date and timestamp up here, UK time. Hopefully you probably were aware that I'm British, and so that's why I've got UK time. That's the last time it's got updated. The current risk calculation is based on retail sentiment from FXCM clients used in the trading station, which is in the second video. And by examining how they stand on a particular instrument, then we'll do the opposite. The reason for it is that the layman, the member of the herd, your average human is going to be wrong, because at the bottom of the information food chain, what they'll normally do, they won't hold on to their winners, but rather as soon as they're into some profit, they'll take profit and think, oh, that was a good result, and then they'll let their losers run. And so they do the opposite of what you should do to be successful. If you do that, you'll never be profitable long term. And this is just the human response to finance. They're just not engineered from a biological level to succeed, because they get emotional. And so this is why we do the opposite of those guys. So currently, what this means, this is the SSI for indices worldwide. So for every one person buying, like say S&P, there's 12 people, nearly 13 people selling the S&P 500. So they're just lining up like a herd in shorting the indices. Now, why are they selling it? They could be reading some news event, or they think that they want to call the top. Perhaps they are at a loss and they've added to that bias and they're trying to break even. But what's happening, we're seeing an increasement, an agreement over time. For 24 hours, they actually shorted it in quite a big way. This is a big shift, a 2.66% shift. So 2 more people came into the fray and shorted. So those 2 people have joined this crowd now, and it's made that crowd a little bit larger, and this can keep going and going. I think the highest I've seen it is -17, and round about there then we had the COVID crash. So we do want to keep an eye on this, but there's a big shift, new guys who've disappeared and they've come, oh yeah, we're going to sell as well. S&P is now over 4,000 and the VIX is low. It's at a very historical low, and it was below the 20% psychological round figure too. So that's that. So it's looking good, it's looking good, it's looking good. And that's also confirmation for risk. And if you understand how risk works with the USD and the yen, then you can use this to your benefit and you can make some nice profits. So when we're risk on, the USD shouldn't really be performing well, and like we see here, which is correct because we're risk on. There's no appetite for a safe haven, which is the dollar. So that's the reason why that's not performing particularly well currently, because we're risk on. If we were risk off, this would be performing well, and this would be up here. So we've got the risk on currencies, the Kiwi and the CAD and the pound, they're performing well. Yen's a bit of a strange one. That yen should be a little bit smaller. And so that's that. So you use the fundamental analysis with your sentiment, and then that was sort of like quite a nice little feature for for your trade entry, to try and get some fundamental basis before entry. If you can get it aligned to the sentiment, that'd be awesome. And then you've got the technical too. So we're going to talk about the sentiment now. The bubbles I will talk about when we get there. I have made a lot of videos regarding the bubbles, but I'll just quickly go over it now because we're in the dashboard tab. What this line, when we close, when we reset the data every day or every week, they're all aligned on that axis. And so anything up here is a sell, anything down here is a buy. But if they add to the bias, which they have done on the pound, then it becomes a stronger buy. And see, they're already long Swiss, but they went long, and that becomes more of a sell. So what we really want to do is pitch that quadrant here versus this quadrant up here. Gold's going to be very interesting because we're actually on the 50% mark. If we go over, we're going to tip over into the strong sell section. The euro is strong sell, so we should see that bubble decrease. For more information about the location and size, I have made a video which I'll append to the bottom of this video. This goes into detail about the size and location. But at a high level, all you need to know is anything down here is a strong buy, anything up here is a strong sell. That would be mixed, and then that would be mixed. The reason for it is that they're long already at the beginning of the week, and they added. Down here, they were short at the beginning of the week, and then they added. And because they're normally wrong, and for all those reasons I explained at the beginning of the video, then they're a great contrarian indicator. The data that we get from their behavior is phenomenally powerful. So that just wraps up those bits. And the radar chart is from FXCM, and when it's sticking out, they're long, and when it's gone in, like we see in the US 30, it's a buy. So anything sticking out is a sell. So there's the USD Swiss, the USD CAD. You would have seen my note about the dollar CAD in the technical area. So keep an eye on that, because we know it's a sentimental sell. We know it's a fundamental sell because of that, the risk calculation. And so all you need to do is get the technical into play, which are your pivots. So if we're below monthly pivot, you've got a good trade here for, 25 days worth of nice trade on the dollar CAD, and you know where your exit is as well. So there's a good potential risk to reward there on that one pair alone, and you get the two to agree. So really at the moment, the USD and CAD aren't really in a great location for a signal, because the CAD is actually quite weak and the USD is a bit stronger than the CAD. But if you can get the things to align, like the fundamentals and the sentiment, then you do okay. Could be that we're just seeing a monitor mode today because we are bank holiday in Europe and the UK. So try and get strong versus weak and you'll be okay. There's the euro pound weakness, for example, and you see how we've actually performing quite poorly today on the euro pound for that logic. FXCM snapshot data. Scroll right a little bit, and so we've got say I just populated this today. There's the comparison for last week. Euro yen, it's more of a buy. France 40, more of a buy. Pound yen, likewise. There's the DAX, there's the S&P, there's the US 30. Now the reason for it to become a buy is because the retail guys are shorted, and that's why we get the buy signals. They're not looking at their fundamentals. They don't, probably not even aware of the VIX, and they're not aware of the sentiment. If they were, they wouldn't have been trading as foolishly as they do. And so that's that. So there's your, signals there for a buy bias. Anything over here? Just some breakdown of data, max and min. What's that now? A bit weird. So yeah, hopefully it explains the dashboard quite well. It's just a high-level summary of a fundamental. The fact that we are risk on because the VIX is lower. There's a sentiment, and there's actually a technical. This is based on just purely price performance technically. And so they should see everything line up, and when they do, then that's great. There's a dollar CAD, for example. So we know that CAD is strong, so that CAD bubble could move, because what happens is that the retail guys are normally wrong, and if price is going up, they'll take profits early. By taking profits early, that CAD bubble is going to move, because that currently it's actually a strongest sell. So there's like discrepancy between the two. So that's the dashboard. Slightly longer than the other tabs, and I'll talk about the SLC and size next.